Good morning, traders. This is Frank Charlie with MF Global coming to you from the Chicago Board of Trade. Thursday morning, October 27th, with early calls in the grains. In the overnight session, corn is expected to open up 10 to 12 higher, soybeans 22 to 24 higher, and wheat 12 to 14 higher. Now, in the outside markets, it's the risk on. I guess all is well in the Eurozone, and commodities are much stronger this morning. Equities sharply higher, dollar sharply lower, treasuries lower, so the safe haven trades are down, all the risk trades are on, and the grains are getting some support from that. Grains gained back yesterday's losses is basically where we're at. Look at that DC corn, right around that 650 level, just like yesterday's commentary before the market opened and sold off. I was telling you, the market seems content with this level right now. Again, I don't see any real need for it to go higher. However, the outside markets may provide enough support to draw some longs back into the markets, even at these levels. We had GDP this morning, third quarter GDP, 2.5% as expected. Now, that is as expected, but it is a slight improvement. It's still not a good number. And I think that this is far from over, the debt crisis that we're dealing with in this country and in the Eurozone. So I'm not getting overly excited about this, but look, you can't fight the tape here. The market's strong, and you need to manage this risk properly. I like option strategies against your futures. If that's something that you want to get a better understanding of, please feel free to give me a call. We're looking at grain markets in a sideways market still. We had a little bit of a sell-off yesterday. We're back basically to the levels that they were the previous day. If you look at these daily charts, these markets are still in a consolidation mode. They're mostly moving sideways. Wheat looks to be moving, bouncing along the bottom there, while beans and corn have gone through a back and fill correction after a sharp sell-off, somewhere between the 40 or 30 or 40% retracement, and they go sideways from here. Now, demand still remains a concern. A second week in a row, we've seen ethanol demand a little better than expected. However, here's how I look at it. At the end of the year, this 45-cent subsidy goes away. You might as well blend and grind as much as you could while the government's still giving you 45 cents a gallon to do it, because that should be gone at the end of the year. This will affect the market longer term, I think. But demand is a concern because, as I mentioned, we got a bumper crop coming out of the Ukraine. We have competition from South America. We have favorable weather down there for their planting season. And we're getting a little better yields than what we expected here as we move along in our harvest. So we did have weekly export sales this morning. At a quick glance, corn came in 336,000 metric tons. The market was looking for somewhere between 650 and 900,000. So this is way below the low end of the expectations. This is disappointing, and this is one thing you really need to focus on is if the demand's not there, the prices don't need to be at these levels, okay? Regardless of what's going on in the outside markets today, if there's no demand for our crop, if they could get it cheaper somewhere else, corn doesn't belong at 650. Soybeans came in at 228,000 metric tons. We were looking for the same range there, 650,000 to 950,000. Again, way below the low end of the expected range. So the disappointing sales in the corn, disappointing sales in the beans. Wheat, 317,000 metric tons, slightly above the low end. We're looking for 300 to 500,000 metric tons. So that's just slightly above the low end of the range. That's disappointing. Maybe what we're seeing is a little bit more feed usage demand there because corn prices are too high. That's a possibility. Oil, soybean oils, and soybean meal, also both below the expected range of weekly export sales. So again, demand is disappointing. Prices are, in my opinion, high enough. Outside markets giving some support right now. We need to see demand pick up. We need to see prices move higher, or they're not going to be able to hold these levels. We're not going to go sideways forever. That's all I have time for now. Please feel free. Give me a call, 866-231-7811. And as always, remember that trading commodity futures does involve substantial risk of loss. and is not suitable for everyone.